Hello, Gapper Scott here, and this is the Gap Wrap for Monday, January 25th. So let me get going because I want to jump into what to expect for tomorrow as fast as I can. And without further ado, I'm going to focus on the futures today because I traded today's gaps, and let me show you why. I know I mentioned in this weekend's video there was a risk factor for following 3-day sell-offs, and that was definitely a concern, and I'll show you how I incorporated that in a moment. But let me first show you where today's gaps opened up among the futures indices relative to Friday's open, high, low, and close. And then I'll show you my pre-market comments, and then we'll talk about tomorrow. So this morning we opened in the DOC zone. That means the prior day was down. Friday was a down day, open and close. We opened between the open and the close. And based upon our market condition testing, 63% win rate, profit factor 0.93. Not good enough to trade, but not terrible either. Okay, that's a key consideration as well. Basically a break-even strategy. Not great, not terrible, not good enough to trade for sure. But not enough to turn me off from the entire trade altogether. Looking at patterns, and what the patterns filter does is it identifies the riskiest, highest sample size closing patterns that I have the most confidence in. It checks to see if the market has any of those closing patterns. That means a daily closing candle that has been triggered with one of these risk patterns. And you can clearly the numbers were very good for today, so that tells you we had a pretty good setup based upon the largest sample size, my most trusted closing patterns. They are proprietary. I talk about some of them from time to time. But what this shows you, 75% historical win rate, profit factor 1.7. Seasonality for today looks at day of week, being a Monday, and this part of the month. Historically, when you had a Monday combined with this part of the month based upon calendar day and trading day, really good numbers here. So that actually surprised me a little bit because Mondays are generally bad days. So even though I had a negative bias coming into today based upon the research that I showed you on gaps following 3-day sell-offs over the weekend, I had 2 of my 3 primary conditions were outstanding numbers, and these are very large sample sizes, by the way, larger than say what I showed you over the weekend for this special pattern scenario, and the market conditions wasn't terrible. So next thing I do is I want to look at the other markets, see how they're stacking up. The YM was also in the same zone. Only 1 of 3 here, even though the number was pretty good on win rate, it wasn't as good on profit factor for patterns. NASDAQ, wow, all 3 numbers. Check that out across the board. Okay, sometimes indices can be technically in different market environments based upon the recent action. This one was that case. Showed very good numbers across the board. And the Russell, pretty good numbers. Look at that win rate, 68 and 69% across the board. Profit factor between 1.15 and 1.3. A little bit weak on that side, but still consistent for the setup. Okay, and the ETF showed similar numbers, so there was nothing really not to like or concerning about today's setups in the DOC zone, if one was considering the ES or the NASDAQ or even the YM, since it's so closely, or any of the markets for that matter. Okay, so let me share my pre-market comments and how I weighed this all out in my head. So market conditions were neutral or weak for most, as I mentioned. Special pattern risk, this up gaps following 3-day sell-offs of at least 4% or greater, were weaker. But what I found out, or additional testing I did for members this morning, was that what was interesting is that up gaps were riskier for all zones except for the DOC zone. Okay, that's the zone I just showed you that we were opening in. So that is the power of the zone. Location, location, location. It's actually like 62%. Well, it varied by market, like 62 to 65%, and profit factors of 1.3 and up. So it actually wasn't all that unusually risky at all for the DOC zone. That was surprising to me. We did have some opening risk with a pivot straddle. And just the size of the gap also was a risk factor. But as I just showed you, win rates and profit factors were good for 2 out of the 3 filters, and opening below the low of 2 days prior is always a positive for this zone. So there was no way I could not fade this gap. There were too many positives. And just to put it in context, the gap guides are conservative by nature, because I'm trying to keep not only me out of trouble, but keep you out of trouble as well. It's using my absolute best information, and therefore it has the largest sample sizes. No, they're not perfect, or no, they're not prone to not taking drawdowns, etc., but they are very good, and when in doubt, even I give deference to them beyond any special nuance patterns such as this one I mentioned here above. Okay, so for me, there was no way I could pass on this because I would have really kicked myself in the rear if I passed on a winning trade. So what I do in these situations, I just simply reduce my risk by reducing my position size. Okay, so as it turned out, I held for a little bit more than, well, let me just get to it and I'll show you how it worked out. Okay, I said I was using the gap guide stop for the ES, which was 6.25 today. Okay, here's the ES. You can see all the markets did about the same thing. All of them filled. Let me show the ETFs. Actually, Spider did not fill, and I mentioned this in the trading room to members that because of the closing action, see how the ETF sold off more into the close, and then the futures actually rallied the last 15 minutes on Friday. So in relative sense, it was a smaller gap for the futures today. You did see 2 of the 4 futures filled. 2 of the 4 ETFs filled, but these 2 did not. Okay, I traded the ETFs. Golly, I'm going too fast. Sorry. I traded the futures, and you may notice that I've got a confluence area that wasn't noted in green on the price guides. For members that have the price guides, there were 3 price levels that just barely missed being within 1 point of each other. We had the midpoint of Friday's trading action, which is this high level here. We had the value area high was here, and the pivot, this pink line, magenta line, was just underneath. And then with the opening price, I knew this was going to be an important area, so I just made it arbitrarily, used a little art, a little discretion, made it a confluence area, and you can see it held the market in check all day. So I shorted the open. I set up 80% of my trade to close out 1 point in front of settlement and a half point in front of the last trade. Last trade is sometimes different than settlement. So I targeted 1092. And as if the market had eyes, it went right down, and just a beautiful trade for 5. I got filled 1/4 point slippage, 5.5 points of profit on 80, a little bit more than 80% of my trade. We'll just call it 80%, and then the last 20% I was holding for the extended target at 1098. It was right there. Didn't quite make it, got a little too greedy, but because of this trend line, it was a clean trend line. I tightened my stop all the way down to right here at 1096.50. Hold on, somebody's banging on my door. Sorry about that. My 5-year-old just came up to tell me it's time for dinner. We've got a basketball game, ladies basketball game, UNC versus NC State. It ought to be a good one. I'm taking all my girls there tonight and my mom, so I've got a boogie. So bottom line, I tightened my stop to where I made +1 in the last 20% or so, and +5.5 on the top 80%, and just a great trade. Now, did I know this market was going to hit? No. Was I concerned about it possibly short covering? Absolutely. There was some risk here, but the preponderance of evidence, at least from what I look at every day, favored trading this gap, just reducing my position size to accommodate risk, and it was a great little win. So this one worked out. They don't all work out, but it was a good trade. So let's look at tomorrow real quickly. Had the big sell-offs that we talked about in the weekend. Okay, what you see here that stands to my attention: inside day, higher low, lower high. Inside day, higher low, lower high, higher low, lower high, another inside day, actually put in a new low in the Russell. Okay, inside days after you've had a sustained sell-off are riskier for gaps generally in both directions. Same with Tony Crable in our 7 days, most narrow range of the past 7 days. I'm not sure this meets that definition because this day may screw it up, but it's awfully close. That tends to be a risk factor as well. So I see risk factors for gaps in either direction tomorrow based upon these patterns. I'll see what seasonality says. I'll see what other closing patterns are in play and what market conditions say. But my instinct tells me this is a riskier trade tomorrow based on what I just shared with you than even today. So probably trade this cautiously, if at all, tomorrow. Now,